I want you to picture a country, a massive country. Population, let's say 619 million people.
Okay.
That would make it the third largest nation on Earth, right behind India and China, and I mean, practically double the size of the US.
Huge.
Now, imagine everyone in this country is there for one reason, not for politics, not to see their friends get married. They aren't there to dance. They're there to plan.
To plan their future specifically.
Exactly. They're designing a nursery, or they're figuring out how to cook a brisket, or they're mentally redecorating their entire living room. That scale. That's what we're looking at today. Pinterest just hit a new all-time high in users. 619 million active monthly users.
It's a staggering number.
Yeah.
And it really surprises a lot of people who still kind of think of Pinterest as this quiet little corner of the internet.
Digital scrapbooking.
Right, exactly. But we're looking at their Q4 and full year 2025 earnings report, and the story here is, well, it's much bigger than scrapbooking. It's about turning that huge population into a commercial engine.
And that is the mission for this deep dive. We aren't just going to rattle off numbers. We want to understand how Pinterest is trying to turn visual searching, looking at pictures of chairs, into actual dollars. Right. And we have a genuine mystery to solve today.
Oh, we do.
We absolutely do. If you just glance at the headlines for this report, you'll see a net income number that looks like it just fell off a cliff.
Mm-hmm.
I mean, a drop that would make most investors completely panic. But then you look at the stock price and everyone seems fine. So we need to figure out why the paper trail suggests a crash while the business reality suggests things are booming.
That's a classic financial puzzle. The answer is all about the difference between, let's say, accounting reality and cash reality. We'll definitely get into it.
Okay, let's unpack this. Top line first. The report's out for Q4 2025. How much money is this country of 619 million people actually bringing in?
Well, the short answer is they're growing, and at a pretty healthy clip. Revenue for the fourth quarter came in at $1.319 billion.
1.3 billion. Okay.
That's a 14% increase compared to the same time last year.
14%. Now, I have to play devil's advocate here.
Ah.
In the world of big tech, Meta, Google, 1.3 billion is almost a rounding error. And 14% growth is solid, but it's not exactly hyper growth. This is actually impressive.
That's a fair pushback. It's not meta money. But you have to look at the context of the whole ad market. Things are stabilizing, sure, but Pinterest is growing faster than a lot of its peers.
Mm-hmm.
And if you zoom out to the full year, 2025, revenue hit $4.22 billion, up 16%. But, the number itself matters less than the type of revenue.
What do you mean by type? Money's money, right?
Not to Wall Street, it's not. The CEO, Bill Reddy, he made a very specific comment in the report about commercial intent. This is their key differentiator.
Commercial intent.
Yeah. Think about your own behavior. When you're on, say, TikTok or Instagram, what are you doing?
Wasting time, usually. Waiting for the bus. Watching a dog do something funny.
Exactly. You're passively consuming. You're in lean back mode.
Yeah.
But when you open Pinterest,
Yeah.
you usually have a job to do.
Right. I'm on a mission.
That mission is commercial intent. You're looking for an outfit for a specific event. You need a recipe for a dinner party. You're in lean-in mode.
I see.
And for advertisers, that intent is way more valuable than just a passive eyeball. The whole challenge, and we'll get into this, is the friction between I like that and I bought that.
So the idea is that Pinterest users are high-value targets. They walk into the store, the app, with their wallets already half open.
That's the theory. But let's look at who these users are, because that's where the theory gets a little more complicated.
Okay, back to that 619 million number. Global monthly active users, MAUs, up 12%. First off, how do they even count that? Is just anyone who clicks the link?
No, they're pretty strict. An MAU is an authenticated user. So someone logged in who visits the site or the app, it filters out a lot of the drive-by traffic. And here's a detail I thought was fascinating. Users of their app shuffles are not automatically included.
Shuffles. Remind me what that is again.
It's their standalone collage-making app, very popular with Gen Z. You can, cut out objects from photos and make these really artistic mood boards.
Ah, okay.
But unless those users also log into the main Pinterest app, they don't count towards that 619 million.
Interesting. So they aren't padding the stats with their side projects.
Correct. But here's where the story really gets complicated. We have to look at the map. Because the nation of Pinterest is expanding, but it's expanding in places where the money isn't yet.
I saw this in the breakdown. It's almost like two different companies running under the same name.
It really is.
Yeah.
So let's look at the growth rates. In the U.S. and Canada, user growth was polite. Let's call it polite. Up 4% to 105 million.
Polite. That's a nice way of saying saturated. I mean, pretty much everyone in North America who wants to pin a wedding dress probably has an account by now.
Pretty much, yeah. It's a mature market. But then you look at the rest of world category.
Latin America, Asia.
Right. That segment just exploded. It was up 16% year over year to 356 million users.
Wait, let me do the math on that. 356 million. That's way more than half their total user base.
It's the vast majority. The center of gravity for Pinterest, in terms of actual human beings, is no longer the United States. It's Brazil, it's Mexico, it's India.
So the people are global, but the money.
The money is still stubbornly local.
Yeah.
And that brings us to the most important metric for any of these companies, ARPU, average revenue per user.
This is the how much are you worth to us score.
Precisely. Let's play a little guessing game. In Q4, a user in the U.S. and Canada generated $9.41.
Okay, almost $10. That's a highly monetized user.
Very. Now, Europe drops off quite a bit. They generated $1.59 per user.
Wow, that's a steep drop from almost $10 to $1.50. But okay, I guess stricter privacy laws, different ad markets.
Now for the big one, that massive rest of world group, the 356 million people, how much revenue do you think they generated per person?
Oh boy. Okay, if Europe is 159, I'll be optimistic, maybe 75 cents?
27 cents.
20. What?
27 cents.
That is, I mean, that's barely anything. That's a rounding error. So you're telling me an American user is worth roughly 35 times more than a user in Brazil or Japan?
That's the math. And you can look at this two ways. The pessimist says they are acquiring millions of users who generate almost no revenue.
Empty calories, basically.
Right. It costs money to serve those images to 356 million people. If they're only bringing in 27 cents, your margins get tight.
But the optimist,
and this is the company's view, sees this as the single biggest opportunity they have.
because the ceiling is just so high. If they can get that 27 cents to just $1,
Exactly. You could quadruple the revenue from your largest user segment. But, and this is the key, it's not as simple as just turning on more ads.
why not? Why can't they just show the same ads to someone in Sao Paulo that they show here?
Because the infrastructure of commerce is different. In the U.S., the path from pin to purchase is pretty much frictionless.
Right.
You see Boots, you click, you have Apple Pay, and 2 days later they're at your door. The merchants are digitized, the logistics are solved.
Oh, I see what you mean.
In a lot of emerging markets, that digital plumbing just isn't as clean. Maybe local merchants aren't on their API. Maybe the payment systems are different. So Pinterest doesn't just have to sell ads. They kind of have to wait for the whole commerce ecosystem to catch up.
It's an infrastructure problem, not just a sales problem.
Correct. But the good news, if you look for it, is that rest of world ARPU grew 42% year over year.
So it's growing fast, even if the number's still small.
Very fast. They're figuring it out.
So the strategy is cash cow in the U.S., high growth venture bet everywhere else.
That's a perfect way to put it.
Okay, speaking of spending money to make money, we have to talk about AI. I feel like every company just yells AI now, but Pinterest claims it's actually central to their product.
Well, in their case, it's not just a buzzword. It's survival. They have a stat in here. Over 80 billion searches happen on the platform every single month.
80 billion.
But think about how you search on Pinterest. You don't usually type a full sentence. You type summer vibes. Or
Gothic wedding. Or you just take a picture of something.
Exactly. Visual search. Find me a rug that looks like this. That is an incredibly hard computer vision problem to solve, and an expensive one.
How so?
Well, if you upload a photo of a messy living room, the AI has to identify the couch, the lamp, the rug. It has to ignore the dog sleeping on the floor. It has to account for bad lighting. And then, this is the really hard part, it has to match those items to a product catalog of things you can actually buy right now.
That sounds a lot harder than just matching the word Nike to a picture of a shoe.
Infinitely harder. And that explains the expense lines in this report. R&D research and development was up 12%. Cost of revenue up 15%. They are pouring money into these models to make those 80 billion searches shoppable.
So they're teaching computers to shop.
They're trying to close that friction gap we talked about. If the AI is good enough, you see it, you buy it. End of story.
Okay, so record users, check.
Yeah.
Revenue growing, check. Building the robot brain to sell us all lamps, check. Everything sounds great. And then I looked at the bottom line. We have to talk about the crash.
The net income crash.
It looks like an absolute disaster. I'm looking at the chart. Q4 2024, a year ago, net income was over $1.8 billion. A huge profit.
Massive.
But in Q4 2025, $277 million. That is an 85% drop. If I'm a casual observer, I'm thinking, oh no, the business is collapsing.
And that is exactly why you cannot just read the headlines. This is a perfect example of why context is everything in finance. That drop, it's almost entirely an illusion. It's all about tax accounting.
Okay, you have to explain this to me like I'm 5. How does $1.5 billion just disappear?
It didn't disappear. It was never really there in an operational sense. Let me try an analogy. Imagine you have a business, and for years, you just lose money. The tax authority says, okay, since you lost money, we'll give you a coupon to pay less tax in the future when you finally make a profit.
A tax credit. Okay, I like coupons.
Exactly. But accounting rules say you can't count that coupon as a real asset until you're sure you're going to be profitable enough to use it.
It's like a gift card to a store that might go bankrupt.
Perfect analogy. It's worthless until you know the store is staying open. So in Q4 2024, Pinterest's accountants finally said, okay, the store's open for business, we can use the coupon. And they unlocked this massive one-time value on their balance sheet, a valuation allowance release of nearly $1.6 billion.
So that huge profit last year, most of it wasn't cash from selling ads. It was them finally cashing in their "we used to be a loser" coupon.
Bingo. It was a one-time accounting adjustment. It made the chart look incredible for one quarter. But now, in 2025, we're back to normal reality. They don't have another billion-dollar coupon to cash in.
So comparing this quarter to that quarter is apples and oranges.
It's apples to a giant one-time fruit basket that you already ate.
Got it. Okay, so if we ignore the tax thing, how is the actual business performing? What's a better number to look at?
Yes, you want to look at adjusted EBITDA. I know, it's a mouthful.
Just tell me what it means.
Think of it as operational cash flow. It's a measure of how much cash the actual business of selling ads is generating.
And what does that number say?
It says the business is very healthy. Q4 2025 adjusted EBITDA was $542 million, and that is up 15% year over year.
Okay, so real profit is actually growing faster than revenue.
Exactly, and their margin is 41%. For every dollar they bring in, they're couping 41 cents as operational profit. That is a very healthy margin.
So the panic over the 85% drop is totally misplaced.
Completely. It's a noise versus signal problem. The signal is the EBITDA growth. The noise is the GAAP net income number.
Good lesson. Always check the footnotes for tax windfalls. So financially, they seem stable. Do they have cash in the bank?
They have a fortress balance sheet. They're sitting on about $2.46 billion in cash and marketable securities.
$2.5 billion. That's a lot of dry powder.
It gives them immense flexibility. They can acquire a smaller AI company. They can weather an economic downturn. And they're generating cash, too. Free cash flow for the year was $1.25 billion.
So this is not a cash-burning startup anymore.
No, it's a cash machine.
So looking ahead, what are they telling us about Q1 2026?
Guidance is solid. They expect revenue between $951 million and $971 million. That would be growth of about 11 to 14%.
Steady double-digit growth. No surprises.
And interestingly, they mentioned exchange rates. Because they're so global now, the value of the dollar versus the euro or the real actually matters. They expect a slight tailwind, which means a weaker dollar might help their reported numbers.
Right. When they bring those euros home, they're worth more dollars. Okay, let's wrap this up. Pinterest is massive. It's growing like crazy abroad, but making almost all its money in the U.S.
That's the core tension. They've made the transition from a cool startup to a profitable company. But their next chapter depends entirely on one thing: friction.
Friction?
Yeah. Can they remove the friction for those international users? Can they make buying a lamp in Brazil as easy as it is in Boston? And can they use AI to make search so good that you can't help but click buy?
That brings me to a final thought. We've talked a lot about commercial intent. The CEO loves that phrase.
It's the whole business model.
But why do people actually love Pinterest? I use it because it's calm, it's aspirational, it's not screaming at me with "Why now" flashes.
It's a sanctuary compared to the rest of the social web.
Exactly. So here's the question. As they use all this powerful AI to turn every single pixel into a price tag, do they risk killing the golden goose?
That is the ultimate trade-off, isn't it? If your dream board just becomes a messy catalog, do you stop dreaming there?
Right. If I'm looking at a beautiful rustic cabin, do I really want pop-ups telling me the price of the firewood?
Probably not. Balancing that inspiration with commercialization is the tightrope they have to walk in 2026. If they lean too hard into the shopping mall vibe, they might lose the museum vibe that brought all those people there in the first place.
It's a delicate balance. Next time you log in to pin something, pay attention. Are you seeing a recipe or are you seeing an ad for a blender? The answer might tell you everything.
It's going to be a fascinating year to watch.
Indeed. Well, thanks for breaking all this down for us.
Always a pleasure.
And thank you for listening to The Deep Dive. Go check out your boards, and we'll catch you on the next one.